Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 9th, 2017. Now to get started this week we're going to begin where we always do with the US dollar index. Now the dollar is starting to turn around here, and the first thing we want to look at is of course the technicals, but we also want to apply some fundamentals this week after we've come out of the non-farm payroll. So when we look at the numbers here, our key VantagePoint 18-day predicted moving average 92.83. You can see that the market is holding off of this 93.23, the VantagePoint 8-day predicted moving average, and we're continuing to advance from there. Now, when we look at the non-farm payroll number on Friday, very important that we review this number, the U6 number. Now, you're going to hear a lot of different things about this labor report. In actual fact, this is a very, very good report. Now, the U3 number, which is nothing more than a household survey number, it is the official number, but the U6 number here is what's important when you're looking at Forex trading and the dollar and the overall employment situation in the US. So we can assess here that this report was absolutely stellar in my opinion. We've dropped from 8.6 to 8.3 on the U6 number, meaning that basically 300,000 new jobs or 300,000 more people have gone back to work. So the U3 number at minus 33,000, there's a 98% chance that that's going to be revised upwards next month, because again, the U3 is nothing more than a household survey number. The U6 looks at the broader unemployment, and we are absolutely heading in the right direction. We started 2017 at 9.4 million. Now we've had a major drop down to 8.3 million, and that's why you're seeing the unemployment rate, going from 4.2 to 4.2, 4.4, to 4.2. So average hourly earnings are up. The work week's extending. Very few negatives in that report, in my respectful opinion, despite what you might hear. So when we look at this, it's no doubt the VantagePoint software has picked up on this several days ago prior to this announcement. We can see that it's been a very, very long time since the predicted MACD has crossed the zero line here, which is basically telling me the dollar is getting ready to rally here. Now, the last time we were actually above the zero line on the predicted MACD was all the way back in January of 2017. We've come close to getting above it, but we haven't broke. So this is a very bullish setup for the US dollar, likely across the board. So when we look at the euro for next week here, guys, our key VantagePoint 18-day predicted moving average, 118.01. And again, this labor report, in my opinion, could very well be a game changer for the dollar. Doesn't mean that the dollar is just going to break out to the upside, but it does suggest that further gains are coming, and more likely than not, we are going to get a rate hike in December now. So if we can break through this 117 support level, VantagePoint is already saying we're going lower with this triple EMA crossed. Most of these indicators, and again, when we look at that predicted MACD, very important that we're looking for a needle in a haystack here. That is absolutely pointing lower here. If we lose this 117 level, we are likely going to see a move down towards 115. Could that be next week? Yes, it could, guys. It absolutely could. So the euro is by far and above the most resilient of the currencies against the US dollar. But I'm not even sure the euro can withstand a labor report like that, because again, once the real money comes back into the market, there was a lot of indecision on Friday. There always is with the non-farm payroll. You have your normal pundits that come out. They look at the U3 number, saying, "Oh, minus $33,000. The sky is minus 33,000 jobs. The sky is falling." That's not what's happening here, guys. You've got solid gains. You've got a solid labor report. So this is all US dollar positive. When we look at again, the US Swiss franc, which basically mirrors the dollar index, you can see that these charts are setting up almost the exact same here, where we've had this significant resistance around 97.60, and we're pushing above it. So if we come back and look at that dollar index chart, you can see that the they're almost identical here. So when the dollar index breaks above 94 and closes above 94, US Swiss franc will follow it. That will likely send Euro US lower. Now, when we're looking at the British pound for next week, I've talked about this one extensively in last week's Forex Weekly Outlook. And again, I had talked about this consolidation period right around this 133.40 area and basically fire at will if we break that level. So we've had a consolidation period around here, the triple EMA cross to the downside. That led to a very substantial, almost a 3% loss for sterling this past week. But we are coming into some very strong support zones down here, 128.50, 129. This is a pretty substantial area to order flow, guys. So they're going to be watching this area very, very closely. The Bank of England is still pretty hawkish also, guys. So if one of the currencies is going to rebound against the dollar, that is probably going to be the British pound. So we're going to look for another move down here. But you can see on the predicted MACD, we are not crossing below the zero line, and we are grossly oversold on the predicted RSI. So our critical level here, 18-day moving average, 132.71. That area we want to watch very closely for a potential retracement. As the further we move away from this area at 132.71, the more likely it is we're going to retrace to it. So keep a close eye on that right now and watch these zones here that I've set up down here at 128 and 129.50, as they may very well hold this coming week. Now, with dollar yen, basically the only thing stopping dollar yen from moving higher right now, we've hit a top around 113.30. We're retracing, but you can see that we're holding strong along this VantagePoint 8-day predicted moving average. We haven't even been able to get to the 18-day predicted moving average. So when we break through 113.24, and there's about an 80% probability we will, then basically we fire at will and start buying above this area here, because that basically tells me that we are moving back towards 114.80 or towards the 115 area, and there may be very little retracement here. Now, the dollar yen responded both positively and negatively to that report, but that's in my respectful opinion because the majority of the masses trading on Friday didn't know how to interpret that labor report. And like I said, when you look closer at it, utilizing all the components of that report, it was very, very strong. And so this will change the outlook, the interest rate differential between Japan and the U.S. in favor of the U.S. So those yields are going up. That suggests that the dollar will rally and the yen will fall, likely pushing this thing through. Now, we do have some issues with North Korea, as I understand it, this weekend. Another possible missile launch. That's a negative. That's a positive for the yen. But once that event risk passes, then we should move higher on this particular pair. That fundamental is something anybody's guess what's going on with North Korea. So I have no control over that. But as for the basic fundamentals of the labor report and the interest rate between the two countries, it definitely favors the dollar. So basically here, guys, long while above 112. To simplify things, this move we've seen a little bit lower on dollar yen is basically just corrective in nature. Now, as we come into our three main commodity currencies, labor report out of Canada, nothing great on Friday, and more importantly, the market is, as I've suggested over the last couple of weeks, really starting to take a closer look at statements out of the Bank of Canada and shaking their head going, I'm not really sure why they raised interest rates here when there's no inflation. Oil prices are down, and the economic outlook for Canada is not that strong at all, especially under this Liberal government. So when we look at that, I believe that this is a very good call from VantagePoint here with this triple EMA cross that happened several weeks ago, and much like some of those other pairs that I just talked about, we're hugging this VantagePoint 8-day predicted moving average. We would be buyers down to 124.31, but we're probably going to see this area around 124.87 hold for next week, and buying on dips is definitely a better play. Once again, when we look at the predicted MACD, we're trying to break above that zero line here, guys. That usually signals a much bigger move is coming. So when we back this chart off a little bit so everybody can see, when we crossed over the predicted MACD to the downside, how this zero line is so important, you can see that that led up from a move from 136 all the way down to 120, a 1600 pip move based on, we could base that on nothing more than that crossover, the predicted MACD crossing the zero line. So you can see we've had a retracement here and failed, but this time we're moving above it. So this is telling me we are likely to move higher on this. And there's very little to support the Canadian dollar, actually, guys. The only thing it had was the Bank of Canada, and that's now being questioned. I questioned it immediately after the announcement came out. So when we look at this right now, identifying those areas to buy on dips, start at 124.87. So all we're waiting for is a pullback to buy more. With Aussie US and New Zealand US, guys, they fall under the commodity block and they are going to come under pressure here. The VantagePoint 18-day predicted moving average 78.64, 78.10, and 77.86 with a very bearish close of 77.63. So selling this one on a retracement is reasonable, but the Aussie and the New Zealand are still high-yielding currencies. They're not just all about commodities. So I'll be keeping a close eye on this, but that crossover of the zero line of the predicted MACD, once again here, guys, a very strong signal, and we are likely going to move lower sooner rather than later. So I'll keep an eye on this one for a possible retracement or longs, but right now we are likely to move lower. Now, much like in last week's Forex Weekly Outlook, I talked about this support and resistance zone around this area right here, and basically told you guys last week that with that triple EMA cross from VantagePoint, if we break through this support zone, just basically short is setting up. And if we break through the top, then we buy up here. But the indicators from VantagePoint were absolutely spot on here. When we broke through that consolidation zone, the indicators already warned us that that was happening, the predicted MACD, the predicted RSI. So right now, New Zealand is relatively bearish, along with the Aussie and the CAD. So selling into rallies towards 72, anywhere around 72.02 is a reasonable play. But if we can retake that area, then we have to question those shorts. But for this coming week, I see further downside on most of your main commodity currencies.